All right, so the market came out the gate with some gusto, but was derailed because the ISM number also had too much gusto. We saw faster increases in the orders, production, and inventory and things like that. And then we got the JOLTS report also, same time. 4.4 million quits, far too strong for the Federal Reserve. This, of course, as the Fed has begun to wind down its balance sheet today. The news, all of that news, really unnerving an already very anxious market. But be careful, folks. There are some stealthy things happening, positive stealthy things I think you should be aware of. Now, what if I told you, in fact, that the S&P 500 was unchanged last month? Now, you would be forgiven for thinking I was nuts. The S&P struggled, obviously. We remember that big time. In fact, at the close on May 19th, the index was off almost 6%. I mean, so crashing all through all kinds of support points. It was a tough month. And then all of a sudden, almost very quietly, we had this rebound, almost a 6% rebound for the rest of the month. That, of course, got us an avalanche of articles mentioning bear market rally. Now, when everyone thinks the rally is a bear market rally, could it actually be more than a bear market rally? Let's ask. We've got Gary Kaplan and Michelle Snyder. You know, the public overwhelmingly expecting the stocks to go down versus going up over the next 12 months. Of course, right now we've got the lowest level of confidence in the market since 2013. Now, here's the thing, Gary and also Michelle, we're talking about right here. I want everyone to take a look at this because it's hard to really see. That's expectations of stock prices going up versus going down. Look how far back you have to go before people were this pessimistic. Does any of that, Gary, play a role with you? You know, the fact that, again, I know we keep talking classic capitulation, but every sign that we see says that most investors are down on this market.
Look, I just watch stocks, and I think what's happened with the individual investor, I keep one screen, Charles, of all the speculation and froth that was going on into 2021. I can't begin to tell you how many stocks were at 30 that are now at 1, that were on the chat boards and the chat rooms. And that's kind of being nice. The SPACs that are at 50 cents right now. I just think price changes emotion, it changes opinion, it changes decisions. And I think that's why you're seeing so many retail investors down in the mouth. Not to mention, you also have Square and PayPal. You have Netflix down 75%. These are brand names that everybody knows about that have been crushed. So I think that's what's going on here. Longer term, it can be bullish because when everybody's out of the market, everybody's sold, there's nobody left to sell. I'm just not so sure we're there yet.
Michelle, of course, people come to you for all kinds of help navigating the stock market. When they come to you, and obviously there's still some trepidation, what are their main concerns right now?
I think the fact that the Fed is now tightening because people obviously got used to the easy money, inflation, and of course Yellen coming out and saying, whoops, we were wrong. And then some people are just more concerned about recession and how long this lasts. But that's where our job comes in. Our job is to be ahead of this, keep all that other stuff out of the fray, particularly the politics and the sentiment, and really start to look ahead. We call the inflation now. We want to start seeing what's going to happen from here. So
with respect to the market being a forward-looking mechanism, right, but look 6 months out, a year out, you would anticipate it to be under pressure like this ahead of a recession or a deep slowdown. At some point, we'd expect maybe the market to start to rally, even as there are question marks. What I'm starting to see, one thing is we see here, this is your advanced decline. The advanced decline is holding up pretty good there right now. And also, if you look at the breadth, the last 3 sessions on the New York Stock Exchange, believe it or not, there were more 52-week highs than lows. Gary, I know you always are looking for nuances. You're always surfing beneath the surface. Are you seeing anything that gives you hope?
All I can tell you is things are a little bit better the last week. But Charles, there is no better indicator for me than scanning 2,000 stocks every night, 200 sectors, every country, every commodity, to see how many stocks are actually in defined uptrends, and the stronger the better. Right now, we may be at 15% uptrends, 85% still downtrends. And what I always try to explain to people, we've had some really good rallies in the last few days, like in an Amazon, but it's still way down from the highs and really has not changed the trend. So I'm not there just yet. I'm always looking for something different, something better. For me, it will always show up. But right now, again, I'm worried about It's just not there. And I must state for the record, I am watching oil prices and the 10-year yield. If they continue to go higher, I don't think anything good happens with markets. I think those are the two marks that every investor should be looking at right now.
You know, it's interesting, Michelle, on that note, the 10-year spike, the yield spiked up. Obviously, we're still down a lot from where we peaked recently. And I look at this data. I mean, okay, the JOLTS report is 2 months old. The ISM number that was so strong is just the strongest it was in a month, right? I mean, the longer-term trend is down. And if you're trying to guess on inflation, do you still believe that we're in the period of peaking inflation?
No, I don't. And I think part of the reason is because some of it obviously could peak. But we're seeing an ebb in things that still are going to have issues because of the fact that we had such low production and the supply chain problems. And I'm very much focused on food as really probably the biggest culprit. And what that leads, including the soft commodities, coffee's flying, sugar's still holding at very high levels, even though the grains have come down, they're still high. And we're heading into a summer season of drought and La Nina. So I think that we can see this food-driven inflation narrative along with oil potentially, and that will then again throw us into another bad CPI, PPI numbers as we go forward.
So let me ask you about valuations then, because the forward PE ratio on the NASDAQ, I want folks to see this. This has come down a lot. We're down almost 40% in a very short period of time. Are you looking at this on a valuation basis, Michelle, or any of the names that you follow, forgetting for the near-term debate, argument, worries of inflation, recession, beyond that, you know, for the next year, 2 years, anything like that, anything looking like, wow, this is very enticing if I'm a buy and hold investor?
Well, actually, the area that I just did a whole article on is really alt energy, because while oil has gone up, there are people out there, even with supply chain, buying EVs, and there is discussion about alternative energy globally, and China's actually at the lead. So I looked at TAN, and I looked at Sunrun, and I looked at PBW and some of the other classic stocks, JKS, which is a Chinese solar stock. And, you know, they look like they're bottoming to me. So I'm actually waiting for this dip here that's coming to possibly be a buyer with a much better risk in those areas.
Right.
Because I do believe that we may see that go a little bit counter to the rest of the market.
Gary, I know you've talked energy. It acts great. I forgot who it was. Somebody this morning on Wall Street said 150 for crude oil.
Better not.
I know you've been mostly watching. Are you in the energy patch or financials? Where are you right now?
This second, no. Last Thursday on what I call confirming day, I bought into just the market. We're talking diversified, no individual names. And I got to tell you, I sold a little bit today already. That's how scared I am. And again, I'm just not seeing the things just yet that get me all excited. And I have studied every bull and bear market. They all trace out certain roadmaps, certain ways. And I'll tell you one little thing that does worry me. Every time we rally up, they're buying up GameStop and a couple others, these frothy things. I have never seen a bear market bottom that had froth and speculation off the bottom. So that's just one of these other little indicators for me. And I just think patience is so important right now, especially when you have these Fed heads that, I mean, all day, all night, conflicting with each other. I worry about what they're going to open up the spigot on the markets with the wrong statement soon. I'm just hoping they go take a vacation. I will pay for the airfare.
Yeah, I don't know if they're getting paid for all those speaking engagements, because they might be making a pretty penny there. But I agree with you. I wish they'd be quiet. Gary, Michelle, great stuff. Thank you both very much.